Hey, what's up everyone? Welcome back to the channel. Today, I'm going to be explaining the capital gains taxes. I know, it sucks watching two videos in a row about paying taxes. But then again, I don't really think most of you saw my last video, so yeah. Now, I myself had flipped a property recently and I took over a year to do so. So the $75K profit I made on that flip was taxed at a long-term capital gains rate, and this substantially benefited my bottom line. Understanding the differences between these two types of capital gain is very important, and to be able to maneuver between the two, if you have the possibility, can really help increase the profits that you make on your real estate flips. So let's jump right into it. The first thing you need to know about capital gains tax is that there's two types: long-term and short-term. You will pay a short-term capital gains on any real estate you hold for less than a year. For any real estate you hold for a year or more, you'll end up paying a long-term capital gains tax. So this is really important to know because the tax rate between both of these are very different, and it can substantially impact how much taxes you end up paying when you sell your property. Short-term capital gains tax will typically be taxed at your ordinary income tax bracket. So if you're in a higher tax bracket and you're doing a flip where you're making a really nice profit that can actually push you into another tax bracket, the short-term capital gains can actually really eat away at your profits. Now let me show you the long-term capital gains tax rates. As you can see, even the highest tax bracket of capital gains may be hard to reach. And if you look at even the highest bracket in the long-term capital gains, it's substantially less than the ordinary income tax bracket you would be in earning that amount of money. So I want to give you an example to show you the financial difference between the classification of gains. Let's say you make $170,000 per year from your current employer. As a side hustle, you decide to buy your first property and to flip it. The property purchase price is $150,000. The rehab cost is $40,000. The after rehab value is $260,000. And your selling expense is estimated to be $17,000. Now your profit on this flip, if you were able to sell it for $260,000, would be $53,000 worth of capital gains. Now, depending on when you sell that property, the $53,000 can get taxed very differently. Let's say this property is sold within 1 year. So you're going to get taxed at the short-term capital gains rate. Since you are already in the 32% tax bracket because you're making $170,000 per year, that's where your taxes will start. Where the 32% bracket ends is at $209,400. When you subtract $170,000 from it, you get $39,400. That's going to get taxed at a 32% bracket rate, which comes out to $12,608. Since you've made more than $39,400 and your profit is actually $53,000, you take the difference between $53,000 and $39,400, which gives you $13,600. And that's going to be taxed at your next tax bracket, which comes out to $4,760. So your total short-term capital gains tax comes out to be $17,368. Now, if you can hold on to the property and sell it after a year, you would get taxed at the long-term capital gains rate. So in this scenario, the $53,000 profit that you've made on your flip will only get taxed at the 15% rate. This comes out to $7,950. So the difference between the two capital gains tax is $9,418. Now I don't know about you, but for me that's a lot of money. So if you can hold an investment property for a year or more without having to worry about your cash flows or the market, it might be very beneficial to do so. So I hope this video was beneficial to you and you were able to get a better understanding of these concepts. If you have more questions or need any more clarification, please feel free to comment below and I'll do my best to help explain the answer to you. On the next video, I'm going to try to talk about active and passive income and maybe how you might be able to switch your rental income from passive to active. Thank you everyone for your support, and if you haven't already done so, please don't forget to subscribe to the channel and like this video. Thanks again.